Alrighty, good morning everybody. It is Wednesday, July 26th, 2023. Let's go ahead and review yesterday so that we could jump into this morning's pre-market. So what I will do, I'll bring the higher time frame up and talk about what we were seeing here yesterday morning. And I believe before the market opened, this is what we saw on the chart, something about that. And we had tested the overnight highs going into the pre-market yesterday morning. We were pulling back from there, and we talked about seeing some pretty good bullish signals from the lows of the last couple days before that morning, and we talked about the nice multiple time frame bearish signal from the yearly high, and said we were currently inside of a battle, and we had to see who was going to win out. So if the bulls could go ahead and jump up, remember this 61.8 level we extended out yesterday as kind of a place marker there. So if the bulls could get up through that 61.8 and then get through the high of the day before, then it was a clear shot to get long up to the high of the year. On the other side of things, if the bears pulled things back and we started to push lower, then and then we could get through this critical area 50% of last week and then get through the low of the day before there, then it was clear we were probably going to get a much deeper pullback and to target some levels down below. And when we started our broadcast, the market was testing our first expected support zone here, right around 45.80 quarter. And we talked about that right when the market opened. Let's go ahead and pull back into our shortest time frame here and look at the details. We were right here testing our first area of expected support, one of our major retracement areas, around 45.80 half. So the market opened. I told you guys, here we are. We're testing our first area of potential support. If you would have bought that level, guys, at the open, you would have had the best trade of the day. All you had to do was buy the market at our first expected support level, and let's see what happened. It went from 45.80 all the way up, and we failed right around 46.08 half. So what is that? That's over a 25 point push from there. If you weren't able to get in right at the open because maybe you wanted to wait and see who was going to win out in the battle in this area, well, what happened? We got the push up, right? So there's the nice first support. Pulled back off the close of the day before, held the 200, and then we rode the FMA. Could have started buying that. Brought you up to the Holy Orange power level for a little bit of a pullback to the close of the day before again. And then what happened? We popped right to the high of the day before, right? Now let's go ahead and zoom out here. So then we get the pullback right back to the Holy Orange power level, get a pop, and then it plays around here. It holds the VWAP. There's one of our textbook beautiful pullbacks, basically a 38 retrace or a 50% retrace to the tick with VWAP there. Gets a perfect bounce right off of it, and then it kind of peters out. We hold the 200, comes down, it holds the scaffolding, and again, even though we have all these levels stacked close together, it seems like the market holds these levels nearly to the tick. So we hold the scaffolding, and then it holds the Holy Orange power level, then it holds VWAP, and it basically chops back and forth between the Holy Orange power level and VWAP. Then finally we pull back to the Holy Orange power level, and then the breakout starts to happen. Once we get through the high of the day before, where did the market push to? Anybody want to take a guess? Pushes to the yearly high. If I could zoom out and go back here. Well, pushes just above the high of the day before there, and then we get the rejection. So it didn't quite get the breakout we were expecting once it could get through that area. And on the way up, though, as a bull, you could have been buying the pullbacks, expecting the continuation all the way up. And remember the high, oh, that's right. I was like, why isn't this on my chart? We did. We pushed right to the high of the year. So remember what I said. at the pre-market, I was a little confused why that line wasn't on my 512 there. We said in the pre-market, where are we here, that if we could get up through the high of the day before, then we were expecting a push to the high of the year. Well, what happened? We broke out through the high of the day before and pushed and turned one tick in front of the high of the year. So if we go back to the 512 here, we got the breakout. I got a little confused there for a second. Excuse me. That line was missing from my 512 tick chart here. So once we broke out from the high of the day before, which was our condition to be bulls for the long up to the high of the year, up here at 46.09, you had an opportunity here to get long and potentially pull another 10, 20 points out of the market. And again, on the whole way up, look what happened here. We got our nice textbook pullback to hold the 200 on 2 occasions. And even if you bought the last test, if you missed this one, if you missed getting long out of the breakout somehow, if you missed the long off VWAP, if you missed the long right at the open that I told you we were testing just as the market was opening, you could have bought that final test of the 200 here at 45.98.99 and still got nearly a 10-point push right to the high of the year, which was our expectation. So yesterday worked out absolutely beautiful. Just, it seems like day in, day out. You know, some days aren't great. Some days are messy. Some days are fairly easy. Another, in my opinion, pretty easy day once we got that breakout. And then once we tested one tick in front of the high of the year, what happened? We started to come back and hold the 200 for a rally back down to basically the low. Now here's another very interesting thing about Fibonacci. If you were measuring the fib, we tested the 38 retracement to the tick for the bounce at the end of the day. And then we bounced back up. Little messy there right at the end of the day, but beautiful hold to the tick off the 38 retrace. And so I'm going to zoom out and show you where that 38% retracement came from. The reason I do all this stuff is to basically continue to try to teach you guys what I'm seeing, why I see it, and why we want to trade these levels. So this isn't just a broadcast to show you what levels you want to have on your chart. It's also to teach you how this all works. So let's look. So we were looking at a fib yesterday going into the pre-market, and we were looking at this fib because we hadn't broken out, right? We were still testing the high of the day before and basically the high of Friday before that and Thursday. And we were pulling back, and that was that 38 we were testing just about when the market opened that I told you was our first support zone. Well, what happened? The market continued to push higher, and we broke out, and again, came all the way up to the high of the year. So because of that, we have to redraw this fib now from 45.60, the low of basically the scene of the crime where we had all those bullish signals on Monday, and draw it all the way to that new high. When you draw it to that new high, it gave us 3 new levels, 2 fib legs and that retracement, the 50% psych level. Well, again, there's that 38. So at the end of the day there, if you redrew your fib, you would have had your 38 sitting right there, and I'm going to have to go ahead and circle that. That is a beautiful to the tick hold off the 38. And now in the overnight session here, we're pulling back, and we retested the 38. It was very messy. So that first test was really the critical area. And we came back and it got messy, and now we're testing and bouncing off the 50% retrace. And as you can see, I've got this shaded here. Before the open market came down here, I have the 38 and the scaffolding as a little 1-point pocket that would make sense for an attempt to bounce. And we did bounce nearly to the tick off the 50% retrace and bounce about 3 points so far. So exactly a 3-point bounce. Unfortunately, if you zoom out and look, we're in a pretty strong little pullback here. So it's anyone's guess here. Is this going to hold? We did get a 3-point bounce, and we're rejecting so far. But that would have been a good attempt there. Now, if it starts to roll back over, I don't know if I would continue to want to hold the trade there. But that was a good attempt there by the bulls. So if you go down to our 512 here and see the details, right to it there. Beautiful little bullish divergence here on the 512 tick. Bounced up. We pulled back off the FMA right now, but the bulls are still kind of holding this area right now. So we're again right at another potential support zone here. And this is going to be important to see if we can actually hold and go ahead and attempt to bounce back up here this morning. So just awesome stuff, guys. It doesn't really get any better than this. I don't know any place in the world where you're going to get levels that hold to the tick within less than a point or two and nearly every single day off these levels. So let's go ahead and jump up to the higher time frames and get our pre-market going for this morning. So let me get the screen over to our shortest time frames here, and we're still holding our potential support zone right here, which, by the way, do have a trade on right now from that area at 84.5. So 84.25 was the retracement. Got a couple exits up above us here as potential support. I could get stopped out, right? It could come back down. I'm going to get stopped out for less than a point if it doesn't hold here. And that's trading, right? So I might get a really good trade this morning, just like the other day, and take some decent profit, or we could fail and come back down. And if so, I'm ready to accept that I'm going to get potentially stopped out here on this trade. So that's what we got for the morning. Like I said, I want to bring this over to the other screen, and I'm about to maybe get my 5-point target here. So if we can get up to the 200, that's my first target, right? I've got it on here at 89.5. We'll see if we can get up there. It will be really sad if we... Oh, there goes my break even. Let's see. I'm actually going to take it at 89 here for 4.5 points, just in front of the 200, and we'll see what ends up happening. So have a great trading morning, guys. If you bought that level with me, let's see how far the bulls can take it. There we go, 89.5. There's my 4.5 point target because I moved it. And I've got the additional contracts on. If the market continues to break out right now and we hold the FMA on the pullback and this can break out to the upside, I've got more targets up above us here to make a little bit more money. And like I said, when we get these moves, like the other day when I showed you my live trade, those are the moves where I make my money, where I can grab 15 points to the upside, I can grab my 5, I can grab my 10. I just made 30 points. And again, my risk from the start in this trade was just a couple ticks below 84.25. When we made this low at 83.75, my stop is less than 1 point, and I could potentially grab 30 points this morning from that. I do have 3 contracts on, so that means that I would have gotten a 3-point stop out, right? But I might be making 30 points, which is 10 times my risk. And we just got a nice bearish pattern right here off the 200, so pretty not a great thing to see for our longs. But all my risk is off. If we come all the way back, I won't lose any money on the trade, and I've already made 4.5 points. So let me get this over to the other screen. And again, hope you guys have a good trading morning. Let's go ahead and move this over. Go back to screen 1 here. Bring this up. All right, so there you have it, guys. Just another morning where we called a potential support zone. We held it with 2 or 3 ticks of risk, and now we're 5-6 points up. So have a great morning. I will hopefully see y'all tomorrow morning to set you guys up for some of the best levels on the S&P. Bye-bye.